All right, so for us to be able to decide and predict and have a forecast on what the price of gold is going to do, we need to look through historical events. And these historical events we're going to look at are what's likely and probable for 2024. And these events are recessionary periods, economy in a decline before a recessionary period. Geopolitical tensions are high. I mean, we have the Iran-Israel conflict, Palestinian conflict with Israel. We have Ukraine, we have Russia battling it out. And then we have another potential wrench to get thrown into this. And that would be China, whether invading Taiwan or trying to unify Taiwan, whether that's through economical means, an embargo, or does it just go by force? So we're in periods of time that our economy is weakening and geopolitical tensions are quite high. So let's start with recessionary time frames. What does the price of gold do through recessionary time frames or times that where the economy is weakening? Economies are weakening. Right now we have the global economy weakening, and then we have the US following behind. So let's take a look through periods of time in recessions. In 1971, we got off the gold standard. That time period prior to 1971 is going to be much different than the time period we're experiencing right now. So that's right here. I circled that for you. Now let's get into the 70s. We have high inflation. We have an economy weakening. We're heading towards a recession. The price of gold right here is going up. And you see that shaded area, which is a recession. Price was very high. And then it looks like we were going to get an expansion, going to get on the other side of inflation. Nope. Inflation ticks back up. Economy's weakening. Boom. Lands us into a recession. And we get a lot of rate hikes. It looks like the economy is going to recover. Now that period's a little bit different. The price of gold was priced in before that 1980-ish recession there. And the economy begins to stabilize, price of gold comes down. 1990, it's a very, very short recessionary period. 2000, again, the economy's stabilizing into that. And then what happens to that 2000 dot-com bubble? Price of gold starts taking off, leading us to 07, 08. And we had a blimp there where we experienced disinflation in 08 and then rockets back up. And then when the 2010s late 2000s were dicey, and then a stabilizing economy. And then looks like right before coronavirus took place that economy was weakening. We easily could have went into a recession, but instead something different. We had a global pandemic, and that leads us to today. Show you this other chart here. It's a little more visual, gives you a breakdown of how the price of gold did. 1973 up 87%. 1980 price went up before the recession, down 5.1. 1981 up 1.6, 0.190s, 5%, 16.3%, 07, 08, 2020, 5.6%. So you can see through economically difficult times that the price of gold does very, very well, generally, or preemptively before the decline in the economy, gold prices shoot up. Now there is occasions where that doesn't take place, but when we're professional investors, we're looking for highest probability. There's going to be no guarantees in whatever investment that we make, unless you're buying, U.S.-backed debts. But again, that's not even guaranteed of what happens if the U.S. economy will under. Very, very unlikely that does take place. Obviously, we're in a completely different world than we live in today if that does happen. But I digress. Bad economic times equals higher prices of gold or stable prices of gold because it's preemptively went up. During economic expansions, so you have to believe that we're in economic expansion right now to believe that the price of gold is really going to start to decline and that trend is going to start down. So either flat, because the price of gold right now currently is up, did it already rally into this recession? Or does the price of gold continue to rise as the recession starts to materialize into 2024 or perhaps into 2025? All right, now let's move on to where we are at geopolitically. Tensions are very high right now. Again, I stated earlier, you have your Palestinian, Israel, Iran conflict right now, Ukraine, Russia conflict, and then also the possible, it's going to take place, very, very likely. May not happen next year or this year, may not happen next year, but it's on the radar. President Xi met with President Biden during their San Francisco conference. He stated that China will unify with Taiwan. Hopefully the means are not by force. That will be foreseen. And Taiwan has a political election this month, and we'll see how that plans out. That's going to really shift which way, depending on which political party in Taiwan wins, whether they're for unification, anti-unification, or somewhere in the middle, which right now the party that's leading the Taiwan in the polls is the non-unification party. So we will see. All right, so in that mind, political and geopolitical tensions are very high. What does the price of gold do? Now, I don't really have a very good chart on this one, but I do have some time periods to point out some tensions, some wars, and then we'll look at a chart that's a little bit previous time in history. So let's take a quick look at this. So what I have on your screen is a Yahoo Finance article, and it talks about how the threats of war affect gold prices. So gold safe haven appeal might lead investors to gold and other precious metals in terms of heightened geopolitical tensions and war. So the late 1700s saw many upheavals, including the Iran Revolution of 1978, Iran-Iraq 79, Soviet against Afghanistan 79, Iran hostage crisis 79. And there's no graph above, but so the gold prices 23% in 77, 37%, 78, and 126 and 79. Here's just a little visual chart. You can see, the arrows listed are times of geopolitical tension, and you can see most of the time prices are going up. Ceasefire, invasion of Kuwait, which lasted a month, gold prices didn't go up because they're short-lived. 9/11, beginning of Iraq War, prices trended higher. So the two possibilities, right? An economic slowdown, which is very likely to take place. Geopolitics, tensions further intensify, likely. The Russian-Ukraine war, there's no off-ramp for Russia right now. They think this West is weakening their stance, so why would Putin take his foot off the gas pedal unless he absolutely has to? Look, and he also said they're going to send more bombs. They're going to start blowing up Ukrainian cities again. So that's not going to de-escalate. Israel is methodically trying to take out Hamas, and they want to minimize civilian casualties, so they have to do this in a methodical way. It's what their current divided administration, well, it's a unified administration because you have their left and the right unified in one government. So they said that they were going to do this slowly. So that's going to take time, and there's always a threat of Israel and Iran, which would be terrible for the world. I mean, Israel's a nuclear power. Iran has a huge military. Not good. China, Taiwan, that will be determined. So as far as probabilities are concerned, price of gold, flat, higher for the year, are completely within reason. The least likely is the gold prices coming down. We need to the economy needs to start picking back up, and we need geopolitical tensions to de-escalate, which is not likely right now. If you find this valuable, again, please do like the video and subscribe to our channel. We'll do more of these analysis of different sectors, different commodities to keep you informed so you can make the best investment decision. Expertise you deserve, experience you can count on.